Good morning, traders, and a happy Monday out there to everyone. Right, starting off the week there after a nice weekend there, which hope you all had a nice weekend as well. And just before we go diving into the charts here, a few items to make note of. One item to note is that it'll be our first trading day of the month of June. Right, so we'll take that into account. We had our last trading day of the month there on Friday, so first trading day of the month today. Outside of that, in terms of economic data, we had some PMI figures out overnight from Europe. And then in our US day session today, we have our final manufacturing PMI at 9:45 and ISM manufacturing at 10 o'clock, respectively, there. So 9:45 and 10 o'clock, we have our PMI figures there to make note of. And then outside of that, we're fairly clear cut on the US side of things there. So that's what we're starting off with in terms of our calendar. And then we'll be able to jump in over here to our daily charts, the S&Ps, which had one admirable advancement there yesterday. A lot of the activity took place at the very end of the day. Right? We had our run up into the month end, so during those last 30 minutes on the pit session display. So it was enough for us not only to push above the high from Thursday, but we also closed well above that high from Thursday. So our close on Friday was right beneath the 5,300 mark at 52.99 and a quarter. Right, and we know that we put in an outside up bar, so we're already getting the follow through component, trading towards that previous day's high on the following day, which thus then brings us into this Globex session here where we did make a new high of 53.13 and a quarter, just compared to Friday. So we've already gotten the follow through component, and up into this area here, what we're dealing with is coming back to the area where we had our two heavier selling days of high to low and high to low. And we came down in a relatively, reasonable format, right? Not just pure single prints along the way down. So when we come up, we have, plenty of reference zones to keep in mind, also including the top of the impulse bar. Always good to note these larger range expansion bars where the top and the bottom of them come into sight. So we had 53.24 as the top of it, all the way down to 52.68 and a quarter. So we did some work around there. We traded around that point on the following day. And then with the advancement on Friday's action, we're now just trading back inside of this bar between that 24 and 68 and a quarter. So that's the daily view in and of itself. This will be our second day up now on that 2-period rate of change. So the testing phase today should be relatively critical or important because we've also, speaking over here on our 120-minute structure, going down to our intraday display just so we can get a tad more detail. We know that we put in our cycle high, right, our new high test. It came in the form of an outside down bar, but still looking at the cycle highs that we had left, we had pulled back and then of course put in a lower high right around this 53.39 mark. And of course we know we had our large downswing, but just noting as we come back up into this area, it's ways away for now, but should we fall short again on taking out that previous high test of 39, what that would set the stage for is going to be our second lower high, meaning here's your one lower high, and then up into this area we could very well be setting the stage for the second lower high, just also noting that we're up against previous congestion zones, right? This is where we had peeled it to the downside. So just noting that type of structure here in the S&Ps. Also, good to note in this area the 53.05.75. We had done some trading around that point there last week, noting that it's one spike low, two spike lows, and we also picked up selling pressure through that point. So like viewing this 53.05.75 as being a valid point of interest there for our S&P. So we've been trading around that point quite a bit in the overnight session here so far, as far as the S&Ps go. So we'll keep that in mind there as the day continues to develop on. And if we go down to a slightly lower time frame from that, what it's going to show up as is just consolidating our advancement there from the close on Friday, right? So strong impulse up. We even made a slightly higher high, right? Hence the higher high compared to Friday. And we've just been consolidating, right? Working off some of this nice upside momentum that we had on the slow line. You could see this on the 30-minute display. The way we corrected some of that upside momentum and haven't really been giving up much ground there as of yet. Zones of interest on the other side of the coin, right? Where would we be a little bit more cautious, right? We'll have this big old single print area beneath the 52.90 1/4. So we'll kind of use that as being a little bit of a caution zone or pivotal area, right? Remaining up above that is all right because we have the 53.05.75. Coming beneath that point, though, puts us into that large impulse bar that we had all through that 30-minute data there at the tail end of the day. So like that 120-minute time frame in conjunction with that 30-minute display for our S&Ps. And then, of course, we know what we're working with there in terms of the daily visual, but that's where we're leaving off there. Moving on along, we also have the DAX future to take into account. The DAX was one of the few that closed in balance on Friday, so we'd want to keep an eye out, see if we get any better range expansion going for it today. So far, we've kept it relatively subdued. It did as well trade above the high from Friday. But coming into the intraday charts, what we have going on here with the DAX, just some additional structural repair that we're starting to trade up in towards. And if we look at the impulse bar that we originally had to the downside, just didn't spend a whole lot of time through the area from this 18.911 down to the 18.748. Didn't spend the greatest amount of time developing that zone, so viewing that as being a little overhead there in terms of the DAX future. We want to see how they behave around that zone, and then of course, since we've done some nice testing, we have several data points down here at the low making this, there we go, the cycle low valid, right? So 18.435. It's a ways down there, but for now they're maintaining all right. You could also view this as kind of being an ABC, up off of the lows in the case of the DAX, just up into some overhead. So I'll leave that 120-minute up there for the DAX. Coming into the session, though, as 3-bar balance mode. All right, and then we have our currency group here, our EC. Quite the ranges for it there last week without resolving too far in terms of directional movement, right? We're starting to see a higher degree of price bar overlap, especially if we consider the nice range expansion bar down that we had there from last week and proceeded to get follow through. However, just not enough to keep themselves sustained, so we've propped ourselves back up into the range, almost starting to remind us of what we had there in the crude for a while, that bracketing market type of mode where we're kind of more prone to the test rejects as opposed to getting too much follow through. So we did, have our 2 days of low to high. The thing is, on Friday, we already had seen a good push down off of the high. So whilst we do have the 2-period rate of change, flipping back down today, we're already back inside that previous day's range, pretty well defined. So looking over here on the 120-minute chart, it is kind of, you see how it's a little on the wide and spiky side. But viewing the 1.08685 as kind of being the, we could do this like the upper end of the range, and then this 1.08180 is kind of being the lower end, roughly. And where we've been surrounding ourselves here, 1.085, we can note that what we have here in terms of like viewing this similar to like the ES, if we're looking at our cycle high, spike high, our slightly lower spike high, and then on last week's trading, we also came up quite well, but not enough to take out the 1.09. Thing is, we have these slightly lower highs, but on the same token, we also have these slightly higher lows. So as opposed to a really strong channeling market, viewing this one as being kind of more range bound in the big picture view there on this 120-minute chart. So with that said, euro currency, we can do some forging to the upside. 1.08685 though is going to be a bit of a reference point above. And if we take into account here something more like an hourly chart or a 30-minute data, viewing this movement off of the high, right, when we came down, right, impulse down, it's along the lines of the A, B, C type of consolidation. A little more clean on the oscillator, just these separate waves. So like that view, we already did the filling in the blanks there last week. We left some development up above, but we've done a fine job on filling out this range, right? Once again, between the 1.085 and 1.08685, we've been putting in some decent work inside of this broader zone in that of the euro currency. But one we'll keep tabs on there today. It's faring all right for itself. So far, just an inside range bar compared to the trading there on Friday from last week. Alright, and then the this gold here, on the other hand, gold was able to put in some deeper tests there last week, including at the very tail end of the day on Friday. We just slipped down and ended up making that lower low on Friday, also in the form of an outside down bar. So kind of the opposite of the ES, right? We already got our follow through in the ES coming up, and then here in the gold, with respect to follow through to the downside. So we made the lower low on this intraday chart with the gold. We'll actually look at that just in a moment. We'll remind ourselves where we're standing here on the daily charts. Right, our separate waves, right? Impulse bar down, our kind of brief consolidation, and then certainly our lower low component, which has already been, completed and fulfilled. If we look over to this left hand side, as far as like where we're trading back in towards here with that of the gold, we could kind of view this as being like an inside pocket zone on the daily charts. We held the first time down into it, formed our bit of a continuation pattern. So this is the second time back into this lower quadrant with that of the gold. The way it looks on the 240-minute display, like the nature in which we came down, obviously this is all low developed area, single prints up above. But over here, 240-minute chart, left hand side, this 2333.7, triple threes there, previous congestion zone where we had done some testing. A lot of price bar overlap was done in here, so we put in a cycle low at 2333.7. We did come down towards that zone overnight and gave it a good test, so we're playing some defense there in the gold. And then if we zoom this in here just a notch, we'll drop it down a time frame or two, but you can see this impulse bar on the 240-minute. So what it's going to show up as on a 15 or 30 minute is that we'd be coming in here and filling in some of the blanks from the structural damage that was done there on Friday, right? We had all of our balancing act, our sharp up, sharp down coming out of balance, right? Our lower low, you can see we didn't quite test that 2333.7, but we came awfully close. So as we're getting some counter-reactive lift into this area, viewing it as being a little resistance all the way up to 2363.8. That would be similar to what we would see on Damon's market profile charts, sticking out as a bit of a volume node or kind of a souvlaki stick, drawing a horizontal line through a large amount of data points. So that will serve as a bit of a volume node in case we forge up further there. And that of the gold, 2337 down below would be more of a caution zone for us. So I like the 240 in conjunction with something like that 30-minute display, and that's in the gold, right, coupled with what we have going on with those daily displays. Alright, and then we have these crude charts to look at, and then lastly the bonds. Crude will shrink up just a notch here, scale it out. Start off here with the daily views. We know, like we were saying with the euro currency, the crude had been working itself in a bit of a range, right? Almost kind of more of an expanding pattern as well, meaning that our cycle highs opened up, we had a lower low, and then we made another higher high, and our lower low portion remains pending. But just envisioning it something like this, if we draw a trend line across those highs, and then vice versa across the lows, like we said, that part remains pending. But just along those lines, the way that we're starting to open up, kind of like that megaphone type of pattern. But with that said, for today's purposes here, we've had 1, 2, and 3 days of high to low in the crude. So we'll see here we have our 2-period rate of change had flipped up for 1 day there on Friday. We closed off of the lows, but we're unable to get back towards that previous day's low. So today's going to be the second day up on the 2-period rate of change in the CL, up against 3 days of high to low. So far, all we've been able to do is put in some pausing activity. So off the bat there, we want to keep that Friday's low on the sheet, see if we're able to do any type of holding around that point, in this case above it, the old 76.67, which we can recall there from last week. Right, so that's our daily chart for the departure point. The 120-minute view starts to show that nature of the bracketing market mode, right, the coiling up, but also the expanding, right, of our cycle highs. Cycle lows remain pending. But zooming this in upon further review here, what we're spending some time developing here, if we look over to the left-hand side, is when we came up off of the lows here, we did it rather quickly in that of the crude, so it didn't spend a whole lot of time into that area. So we are proceeding to fill out some range here in the crude. You can even view this as being oiling up just a notch on the 120 minute, whilst the slow line corrects itself back up. We made the lower lows in the price, some higher lows in the oscillator, so we're working on correcting that slow line back to zero, right, in reference to this 310 oscillator, and our satisfaction from price has been relatively mild so far. So coiling up on the 120 minute chart, working on what would be the first pause bar of green after 3 red bars down on the daily chart of the crude. So we're going to have some work certainly cut out for ourselves there. 76.15, of course, is the full test down. That would be the lower level of interest there in the crude. But for now, left hand side, just filling in these broader ranges there, which shows up a little better on the hourlies or the 120 minute for that of the crude. Here's the hourly view. Alright, and then last, but certainly not least, since they opened up there as well last week, in terms of their range, is going to be that of the bonds, right, the 30 years, which, very impressively, we've almost come back, pretty much have, back towards the point we were trading before we had our breakdown from balance, or the 2 days of high to low, strong high to low. So we formed our inside range bar, which was alright. Friday we had range expansion from the inside range bar balance. So this kind of fits into that 3-bar breakout category. The other thing is that we were testing on the other side of that daily 5 SMA, so as opposed to backing off all too much, we were more so getting follow through from the breakout component. So impressively, we traded above the high from Friday, and remember this zone we were dealing with there coming up into these single prints, that 116.17 really was the bottom of that previous area, right? We had 2 well-defined tails there, right, into the low developed zone. So we came up, started to trade around that point, stalled out there mildly, but with the advent of our overnight session, we've been able to forge up a little further. So we can certainly say, pretty much completed the cave fill to the upside in that of the bonds. We used up a lot of energy over these past 3 trading days, so viewing that as kind of still being an over and under, we've already filled in a lot of the blanks, so dropping back beneath 116.17 in the bonds, wouldn't view that as being too constructive for them. All right. Otherwise, if we continue our advancement, we'd be looking at the top of the impulse bars. 117.10 would pretty much bring us right back into the range we had been trading before our breakdown. So kind of an important area there in that of the bonds. And then we can also consider the posturing on the yield displays. Of course, small gap on the opening, but coming in right around 4.617%. And you see as well, right, the previous congestion we had closer, or just, if you would, beneath the 4.6% handle there as far as the 30-year yields go. So the bonds will want to keep on the radar there today, see how those ones behave in that early morning session, using that 116.17 as being a nice point of interest there. Alright, and with that said, we're going to grab these S&Ps, get those loaded back up in the queue there for us. And we'll see what we have lining up for this nice session in front of us. We're pretty light on the economic data for the early morning session, so things should be off to normal operations to begin with there, and then we'll be on guard for any subtle nuances there. See how we want to handle as well that early morning opening. Since it is the first day of the month, we'll consider the volume readings out there as well, see what type of volume we have shaping up against what we had there at the tail end of last week. So we'll dial some things back. I'm going to get some charts back up and adjusted, and we'll see what we got lining up here for this morning coming up in front of us.